Now let's talk about the upcoming events for this week, the week heading into Christmas. So today, Wednesday, we have the PSNB from the UK, the public spending, which means how much money did the government take from the public to spend. Not that important. Existing home sales from the United States at 3 p.m. GMT. Watched, but remember, new home sales are more important because they trigger more economic activity. And oil inventories, maybe a rise in inventories could dampen the rise in oil prices, but you never know. It's always a surprise there. There are some indication from private estimates, but these don't always correlate very well. But for those trading the Kiwi, remember the Kiwi fell quite a bit. We have New Zealand GDP. In general, we have a week full of New Zealand indicators. That's because some figures have been postponed because of the earthquake that we had a few weeks ago in New Zealand. Okay, so that's today. Tomorrow is the busiest day of the week, Thursday, December 22nd. We have a lot of figures published at 1:30 GMT. The US final GDP, we're expecting an upgrade from 3.2 to 3.3%. This is a very strong growth rate, an annual growth rate, but it's important to remember that Q2 and Q1 and also Q4 2015 were very weak, just above 1%. So this is a comeback, a payback quarter. We're expecting also okay growth in Q4, above 2%. Another figure that we have is durable goods orders. That's for the month of November, so that feeds into growth for Q4. Should always surprise. Watch for the core figures and not the headline figures. Jobless claims, as usual, they've been steady around 250 something. For those trading the Canadian dollar, also very busy with Canadian CPI and retail sales. And for a change a bit later, we have the core PC price index. Sounds very boring, but that's the Fed's favorite inflation figure. It has been extremely steady at 1.7% year over year. We also have personal spending and personal income. Friday, the day before Christmas Eve, we have quite a few figures as well. So a last-minute rush before the holidays. Final GDP in the UK, this rarely changes. It's for the third quarter, the post-Brexit quarter, post-referendum quarter. We still don't have an official Brexit, only the referendum results and the current account there. UK GDP rarely moves in the final outcome. And we have also GDP from Canada. In Canada, it's monthly, and this is for the month of October, so first peek into Q4. And just before we end the week, new home sales in the United States, also revised consumer sentiment. They might, maybe the markets will move regardless of the figures. These will be the last figures before the holidays, and some last minute fixings could be seen. Remember that this is end of year, they're always end of quarter, end of week. We still have one more week to 2016, but some traders are off, and some portfolio managers have already begun their end of year adjustments. What does this mean? That if you're a fund that is dedicated to stocks, okay, and you have to hold a certain percentage of European stocks, and due to the changes in the exchange rate or the values of stocks, okay, your percentage of European stocks, let's say, fell. Now you need to compensate for that to maintain, let's say, I don't know, 60% European stocks. So you need to buy more European stocks. So that means buying euros and selling dollars, for example. There are, of course, many more examples, and good portfolio managers adjust as they go. They don't wait for the last minute, but portfolio managers need to publish figures at the end of every quarter, at the end of the year, of course. The bottom line for on December 31st, it's those letters that you receive in the mail. So that's why we have these last minute adjustments. Last minute adjustments at the end of the week, at the end of the month, at the end of the quarter, and at the end of the year. When they come at the end of the year on low liquidity, they cause bigger moves. We've seen these in the past. Sometimes these moves have already gone through, and we have just an extension of ranges. At the moment, I don't have an estimation about where what these moves are supposed to result in: stronger dollar, weaker dollar. But remember, some moves can be big, some moves can break technical levels. So be careful out there. I see we have a question.